Great to have you on here. I just want to get a sense of the conversations you've been having over the last 24 hours here plus. Are your clients asking you about whether or not the president can control the head of the Federal Reserve, or are they still focused on the broader tariff policy uncertainty?
You know, it's interesting. The Federal Reserve question has been an issue of conversation for me and my clients for almost a year and a half, 2 years before Trump was even elected president. This is something the street is inordinately focused on. There's obviously going to eventually be turnover starting in a couple months at the Fed. There's questions about who might be going, who's replacing him. Is it Scott Bessent? Is it Kevin Warsh? Who comes next? So that's definitely a very popular topic of conversation. And it's kind of a constant rebalancing of investors who are just trying to find some sort of foothold amongst the tariff uncertainty that is looking like it's going to be with us for months, if not years now.
If we did see Fed Chair Jay Powell ousted, and ultimately, let's remember, just the kind of baseline of this, he is in this role, or his term continues to move through mid-2026. If he was ousted, he has actually legal protections as well. So it would have to be for whatever miraculous cause gets kind of trumped up by the administration, pun fully intended. So all those things considered here, how does that also impact what the markets have become to and come to know for decades as the independence of the Fed? How does that throw that in jeopardy?
Well, the independence of the Fed is absolutely critical. I mean, I was a Senate staffer when we were taking votes on things like auditing the Fed, which a lot of folks don't even want. You need to have that independent Fed when there is so much power resting with one president who can change his mind at a day's or an hour's notice. That kind of uncertainty is, cataclysmic for markets. And that's what you've been seeing for the last couple of weeks. So what you really need is sort of a comfort level that this president will not upend norms and fire the Federal Reserve chairman for, reasons that aren't exactly by the letter of the law, which is subject to interpretation. And right now, nobody has that confidence. Moreover, we don't have the leadership in the Republican conference on the House and the Senate side, and it has to be Republicans because they're in the majority, and the minority members on the Democratic side don't have this power. You have to know that there's some sort of leash on the president, and there is not right now. And I would say, even now that we've got a new Senate Majority Leader in John Thune and not the old hand of Mitch McConnell, is a little bit unsettling as well, because you don't know how far Senator Thune is willing to go to rein in the president on this. You can do things like stop nominations processes, stop forward progress on the reconciliation bill. There are things that the majority party in Congress can do to put a tether on the president, and they're not doing that right now. So that removes just another leash factor that we would otherwise see on any sitting president.
So Henrietta, if a client asks, is this something that could likely happen, what do you say?
I say I don't think so. I wouldn't expect it. But that's mostly because the market will send such a disastrous message. Now, I think the market has made that really clear, and I think that's positive and constructive. We did see the president react as the bond markets tanked a few weeks back during the tariff tumult. So there is some sort of leash, whether that's coming from Treasury Secretary Bessent, putting some sort of restriction on the president's impulses here. Right. So I'm optimistic that the market will send that message and has sent that message clearly. But the president is plainly jawboning about it, and that in and of itself is disruptive.
And you just said earlier that clients are just looking for solid ground here. Some members of the administration seem to think solid ground can come via tax cuts. Are they right?
That is their hope for sure. For example, when I speak with Republican leadership, chiefs of staff, and things along those lines, they'll tell me that just the certainty provided by passing a permanent extension of existing tax rates should be substantially stimulative because of the certainty that it provides to individuals. Now, when I say that to investors, they laugh, quite frankly, because you're effectively saying the tax rates that have been the same for the last 8 years are going to continue being the same, and they struggle to find that stimulative. But the idea of that certainty really speaks to just how much uncertainty there is elsewhere, that just in understanding the tax policy is going to remain, static is good news. So they're really reaching here.
Henrietta, as I'm taking a look at the CME FedWatch tool, as of right now, this morning, it seems like there's, only ballpark around a 10%, 9.1% actually, now that I've refreshed my screen, chance that the Fed would actually cut at its May meeting. And a lot of the thinking coming into the start of this year is that with what they've already been monitoring in the economy and their own data dependency, they weren't expected to cut until the back half of this year. What is the likelihood that we see not just a cut in May, we know that that's 9.1% probability, but more cuts than anticipated as a response to what the Fed is trying to perhaps get ahead of in how much the tariffs could actually impact the economy?
You know, the question, we talk about this a lot in investor meetings. You know, if you're sitting in a room with 5 folks or 50 folks, this always comes up. And the main response is the Fed can't possibly cut right now. And I think that, you know, I forget the number you said, 10.1% odds is pretty spot on with what I'm registering in client meetings. There is yet this additional conflict of Fed autonomy and the Federal Reserve stepping back and saying, we did not start this tariff war. This is a policy decision. This is up to the executive branch. We cannot be asked to engage, especially when inflation and unemployment are giving us the numbers that they're giving us right now. As this starts to seep in, obviously the Federal Reserve will react. I think that that is something that is expected and back half year situation. But for right now, they can't be seen to be reactionary, particularly given the uncertainty around whether these tariffs are going to go into effect, not go into effect, how disruptive are they going to be? And all that's going to come out in earnings and over the next couple of weeks as we start to see bankruptcies from small businesses in particular, which would lead to layoffs. And then you get rate cuts. But I wouldn't expect them to be preemptive, especially with all this focus on potentially firing the Federal Reserve Chairman for no good reason.
Henrietta, thanks so much for taking the time here with us this morning.
Thanks for having me.